He happens to be one of the greatest historians out there. He's also a definitive voice when it comes to talking on the precious metals. Don Coxe, Chairman of Coxe Advisors, joins me back on the program. Don, it's always a pleasure having our yearly reunion here.
Great to see you again, Dan.
Well, you're a speaker here at the Minds and Money Conference. You also have a book coming out, which we're going to talk about in a little bit. But, you know, catching your talk earlier this week, you were mentioning how gold will continue to be the best performing asset in your eyes. Let's talk a little bit about that today.
Apart from silver, that's the only other thing that's going to outperform gold if it does. And the reason for that is because gold is financial antimatter, which is that it's something which does not perform along with everything else in line. It performs the opposite way. And you see, you look at it in this century, which has been a huge disappointment. We came into this new millennium thinking it was going to be the biggest boom of all time. And instead we've had nearly the biggest bust of all time. So what's happened, and gold has way outperformed stocks, and I mean, it's no comparison. So the reason then is that you still have to, what the central bankers have created trillions and trillions and trillions of dollars of new money, and it's not doing anything. So even if a small percentage of what they've created moves from wherever it's sitting now, and it's being driven out of it by negative interest rates. And you know, when I first met you, neither one of us would have thought there would be such a thing as negative interest rates. We're talking about something that has never existed in human history. You see, what people have to do is change their thinking. But you see, because we're being run by PhDs in economics, China saved the world after the crash by continuing to buy, and the central bankers saved the world by printing money like mad and not creating inflation, but creating something. But we've had 5 years in a row where the 1,000 economists of the Fed predicted better economic growth than occurred. 5 in a row. Well, now, they're not idiots, so that shows you how serious the problems are.
It's interesting. Yesterday I was moderating a panel, and I mentioned that last year at this time I had interviewed many who thought gold would be at $1,000 in 2016, completely discounting gold. Now we look at the metal up close to 30% this year. Look at gold mining stocks, some up 100, 200%. And I guess the greatest, argument that I'll get back is, well, the Fed will most likely raise rates. So let's play out this scenario that we'll get a rate hike in December. What would that do to the price of gold?
Well, this might also be the first December where Santa Claus comes. We got to allow for that possibility too, all right? It's a somewhat higher probability than Santa Claus will come.
Okay.
But I have been telling my clients for 3 straight years, if you spend more than 5 minutes a week reading material about what the Fed is going to do at its next meeting, you're wasting your time. What we've replaced is we went from the Paul Volcker, which was nothing, no speech, just action, to the open mouth policy, to the fact that these economists are going all over, and what they say signifying nothing. So if they do raise interest rates in December, then okay, so then we get another 25 basis points. But what you know then is that's the last one. And therefore it would be an act of grandiose glory for the economists. For once they would have done something. But after that they're going to have to make up with the fact that they've got right across the ocean, you're not going to get a raise in rates out of the European Central Bank because they've got a multi-series of crises coming in there. So the best assumption is that if they do raise the rates, it'll probably mean they're going to have to cut them much faster because they're not going to. They're actually, the odd reason that the argument they're raising for doing it is that they want to say, well, we want to be able to do something other than immediately go to negative rates. In other words, what they're doing is adding something on so they can appear to respond when the country goes into recession. It will not trigger the recession in itself, but therefore it is a maneuver. It is not an answer.
So when I speak with most analysts, they advise between 5 to 10% of your portfolio should be in gold. But given your thought process, do you think investors should have a greater allocation in
15 to 20. Yeah, and gold and silver. And the reason for that, I mean, If it weren't for the negative interest rates, I would go along with that. But when you get something new which is challenging the fundamental physics of finance, as I say, it's really important to think of it in Einsteinian terms. This is challenging the physics underlying the financial system. And therefore, that means there's a whole new risk that nobody's writing about. But what it is, it's a relentless risk.
U.S. politics. In your talk, you mentioned that Donald Trump would be a better play for gold.
Yes, and a better play certainly for Canadian oil too, because Keystone will be approved within 60 days. Absolutely. A Republican Congress and Trump, that's the first thing they would do is approve Keystone.
So you think he'd be better for the overall economy than Clinton?
Well, it's hard to say because it's hard to say what he will do. But if he's constrained by people like Paul Ryan, yes. Because what Hillary is saying is basically more of the same. She's basically her agenda is basically political correctness. And political correctness isn't something that helps the economy. What it does is suppresses people from behaviors that are now found bad.
All right, finally, Don, what message would you like investors to walk away with here after this Minds and Money conference?
Well, first of all, that this is an industry which has been battered on two counts because the slow economy meant that base metals were negative force, and the coal was hit by the global warmists. And then we had the triple waterfall crash after the Greece crisis. So it had those three things, three strikes, and we were out. Well, now look at it. Put it the other way around, is that the precious metals, for the reasons we've talked about, look attractive. And the second best performing group in the IBD series through to August, next to precious metal stocks, was coal stocks. Why? Because it was a bet that Trump might win the election, and Trump has made it clear that he's going to deal with the Environmental Protection Administration about shutting down coal operations. So there's another part of the mining industry which may get brought back from the dead. And as far as the base metals are concerned, tough outlook. Yep.
Finally, you have a book coming out, so
yes.
We can read more about Don Coxe and his thoughts. What's the title of it? When's it coming out?
The title keeps getting changed, but it looks like it will be In a Disinteresting World. Disinteresting, because, see, we got to coin a phrase for this, because negative interest rates did not exist even in one's imagination before. And that is, to me, the biggest change of all.
And when's it coming out?
With luck, it'll come out in time. We'll find out whether the Fed actually raises rates that month.
All right. Well, I expect a copy, please.
Okay.
All right. Thank you so much. It's always a pleasure speaking with you, Don. And thanks for watching our coverage here from the Minds and Money Conference in Toronto. We'll have more for you, so be sure to stay tuned to Kitco.com. Thank you, Don.
Thank you.